What if the biggest secret behind wealth is not hidden in stocks, crypto, or business ideas, but sitting right in front of you every single day in the form of buildings, houses, and land? Most people walk past properties without thinking twice. They see a house as a place to live, not as a tool to build wealth. But, somewhere in the same city, another person sees that exact same type of property and thinks, "This could make me rich." Now here is the surprising part. Real estate has quietly created more long-term wealth for ordinary people than almost any other system in history. Not through luck, not through winning a lottery, but through ownership, patience, and strategy. Think about this carefully. Every day, millions of people are paying rent. That money does not disappear. It flows into the hands of property owners, people who control assets, who understand timing, and who know how to use leverage. And here is the truth most people overlook. Real estate does not reward the hardest workers. It rewards the smartest owners. Someone earning a modest income can still build significant wealth if they understand how to use real estate correctly. On the other hand, someone with a high salary can stay financially stuck if they never invest in assets that grow. So the real question is this: why does real estate have the power to turn ordinary people into wealthy individuals, while so many others remain stuck working paycheck to paycheck? The answer is not about luck or secret opportunities. It is about how the system itself is designed. Real estate allows you to control large assets with relatively small amounts of money. It allows you to generate income from something that grows in value over time, and it allows you to benefit from other people's money and effort. But most people never see it this way. They see a house as an expense, not an investment. They think in terms of buying a place to live, not owning a system that generates income. This difference in mindset is everything, because wealth is not just about what you earn, it is about what you own and how those assets work for you over time. In this video, we are going to break down exactly why real estate makes people rich. Not with vague ideas, but with clear logic, real examples, and simple explanations. By the end, you will understand why so many wealthy individuals rely on real estate, and more importantly, how this same system works in the real world, because once you see how this works, you will never look at property the same way again. Most people fail to build wealth through real estate because they misunderstand how it actually works. They see it as something complicated, risky, and out of reach. As a result, they never even try to explore it seriously. One of the biggest misconceptions is that you need to be rich to invest in real estate. People assume that unless they have a large amount of money saved, they cannot buy property. So they spend years waiting, saving small amounts, and hoping that one day they will finally have enough to get started. But that day often never comes. Prices go up, life expenses increase, and opportunities pass by. Meanwhile, others who started earlier are already building equity, collecting rent, and growing their wealth. Another common belief is that real estate is too risky. People hear stories about failed investments, bad tenants, or market crashes, and they assume the entire system is dangerous. So instead of learning how to manage risk, they avoid investing altogether. This is a critical mistake, because every investment carries risk. The difference is that successful investors learn how to manage and control that risk, while others simply avoid it and miss the opportunity entirely. There is also the problem of mindset. Many people think in terms of spending money, not investing it. When they receive income, they focus on immediate consumption instead of long-term growth. They might save a little, spend the rest, and repeat the cycle every month. Over time, this limits their financial growth and keeps them dependent on active income, like a job. Meanwhile, wealthy investors think differently. They focus on acquiring assets that generate income. They ask questions like, will this property produce cash flow? Will it appreciate in value? And how can I make this asset work for me over time? Another major misunderstanding is how time works in real estate. Many people expect quick results. If they invest, they want immediate profit. If they do not see fast returns, they lose interest. But real estate is not designed for quick wins. It is a long-term system. It rewards patience, consistency, and strategic thinking. People who expect overnight success often give up too early. They fail to see that real estate builds wealth gradually, through compounding effects like rent income, loan repayment, and property appreciation. The result of all these misunderstandings is simple. People stay on the sidelines. They delay action, avoid learning, and miss one of the most powerful wealth-building opportunities available. So the real problem is not a lack of opportunity. It is a lack of understanding and the wrong way of thinking about money, assets, and time. Until this mindset changes, most people will continue to miss out on what real estate can actually offer. Real estate makes people rich because it combines three powerful financial forces into one system. These are leverage, cash flow, and appreciation. When these three work together, they create a compounding effect that builds wealth over time in a way that is difficult to replicate in other investments. Let's start with leverage. Leverage simply means using borrowed money to control a larger asset. In real estate, this is one of the biggest advantages you have. Instead of paying the full price of a property up front, you typically make a down payment and finance the rest through a loan. This allows you to control a large, valuable asset with a relatively small amount of your own money. For example, if a property is worth $100,000, you might only need $20,000 as a down payment, but you still benefit from the full value of the property. If the property increases in value, your returns are calculated based on the entire $100,000, not just your $20,000 investment. This amplifies your gains significantly. Now let's move to cash flow. Cash flow is the income you earn after all expenses are paid. In real estate, this usually comes from rental income. When you rent out a property, your tenant pays you monthly rent. That rent is used to cover your loan payments, maintenance costs, taxes, and other expenses. If managed correctly, there is often extra money left over. This becomes your profit. This means you are earning money every month, not just waiting for an asset to increase in value. At the same time, your tenant is indirectly helping you pay off your loan. Over time, this increases your ownership of the property. Now, let's talk about appreciation. Appreciation refers to the increase in the value of the property over time. Real estate tends to appreciate due to factors like population growth, economic development, inflation, and increased demand for housing. As the property becomes more valuable, your equity increases. Equity is the difference between what the property is worth and what you owe on it. So, as you continue to make loan payments and the property value rises, your net worth grows from both sides. Here is where the real power comes in. These three forces do not work separately. They work together. You use leverage to acquire the property. You earn cash flow from rent, and you benefit from appreciation over time. This creates a system where your money works harder than it would in most other investments. Additionally, real estate gives you control. You can improve the property, increase rent, refinance your loan, or adjust your strategy based on market conditions. This level of control allows you to actively influence your returns, which is not possible in many other types of investments. In simple terms, real estate builds wealth because it allows you to control valuable assets, generate consistent income, and grow your investment over time, all at once. To understand how real estate creates wealth in the real world, let's look at a few well-known examples and also connect them to a simple, realistic scenario that anyone can relate to. One of the most widely recognized figures associated with real estate wealth is Donald Trump. While his entire financial journey includes multiple ventures, a significant part of his early success came from real estate development and property ownership. He focused on acquiring large, valuable properties, developing them, and leveraging them to build more opportunities. The key idea here is not his personality or controversies, but his use of real estate as a financial system. He used assets to create more assets. Another strong example is Robert Kiyosaki, who is well known for promoting financial education and asset-based investing. In his view, real estate is one of the most powerful tools for generating passive income. He emphasizes that wealth is not about how much money you make from a job, but how much income your assets generate for you. Kiyosaki often talks about acquiring income-producing properties, allowing tenants to pay down the loans, and then using that income to invest in additional assets. Now let's look at a simple, real-world scenario. Imagine someone buys a small apartment using a loan. They pay a down payment and finance the rest. They then rent out the property to a tenant. Each month, the tenant pays rent. That rent covers the mortgage, maintenance, and taxes. In some cases, there may even be a small profit left over. Over time, something powerful happens. The loan balance decreases as payments are made. At the same time, the property value gradually increases. This means the owner is building equity from two directions at once. Now imagine repeating this process. After the first property is stable, the investor uses the income or equity to acquire another property, then another. This is how many real estate investors build portfolios over time, not through sudden success, but through consistent strategic steps. Even outside of famous examples, thousands of everyday investors follow this same path. Some start with a single property. Others begin with small apartments, duplexes, or rental homes. They focus on cash flow, manage their properties carefully, and reinvest their profits into more assets. Over time, what started as a single investment can grow into a portfolio that generates steady income. In some cases, this income becomes enough to cover living expenses, reducing or even replacing the need for a traditional job. This is the real power of real estate. It is not about one big deal. It is about building a system that grows step by step, year after year. The most important lesson from all of this is simple, but powerful. Wealth is not created by how much you earn from a job alone. It is created by how well you use your income to acquire assets that generate more income over time. Real estate stands out because it allows you to do exactly that. It gives you the ability to turn a single purchase into a long-term income-producing asset. But the real value does not come from just owning property. It comes from how you think and how you act as an investor. Most people approach money with a short-term mindset. They earn, they spend, and they try to save whatever is left. This keeps them in a cycle where their financial situation does not improve much over time. But real estate investors think differently. They prioritize acquiring assets. They look at opportunities not based on emotion, but based on numbers, potential income, and long-term value. They also understand that patience is a critical part of the process. Real estate is not about getting rich quickly. It is about building wealth gradually through consistency. Each property adds another layer of income. Each mortgage payment builds equity. Each year of ownership increases the total value of the investment. Over time, this creates a snowball effect. What starts small can grow into something much larger if managed properly. Another key lesson is the importance of discipline. Real estate success is not random. It comes from making informed decisions, managing risks, and staying committed to the long-term strategy. You cannot treat real estate like a gamble. It requires research, planning, and careful execution. At the same time, it also rewards those who take action. Many people understand the concept of real estate investing, but very few actually start. The difference between those who build wealth and those who do not often comes down to action. Even starting small can make a difference. One property can be the beginning of a larger journey. What matters is consistency and the willingness to learn and improve over time. The final takeaway is this. Real estate is not just about buying property. It is about building a system that works for you. A system where your assets generate income. A system where time increases your wealth. And a system where your financial future becomes more secure with each step you take. If you understand this, you stop thinking like a consumer and start thinking like an investor. And that shift in thinking is what separates people who stay financially stuck from those who build lasting wealth. If you want to understand how money actually works and learn how to build wealth using systems like real estate, then subscribe to the Geeky Investor. Because once you understand these principles, you stop chasing money and start building assets that create it.